I've made 570 euros over the last 18 days, but today's trade didn't go as planned. In the next 10 minutes, I'm going to break down the trade setup, show you exactly what happened, and at the end of the video, I'm going to reveal to you my biggest lessons I've learned so far. Without further ado, let's dive right into the charts. There's not much to say about the high time frames. We took these relatively equal lows right here, and we've been rallying to the upside since then. So due to the fact that we are trading in all-time highs, we don't want to fade that. So in other words, we don't want to be the one who's picking the top in a bullish market. So our bias remains bullish. Let's drop down in the 1 hour chart. Price was actually retracing in this fair value gap right here, and we've reacted and we've been supported from this fair value gap to the upside. We created a market structure shift. And around 9:30, which is here within this candle right here, I actually expected price to retrace lower into these fair value gaps right here, and then look for a buy signal to trade long and target these highs right here, the latest all-time high at this current point in time. Let's drop down into the 50-minute chart. The 50-minute chart pretty looks just the same as the 1 hour chart. As I told you, 1 hour fair value gap right here, market structure shifts. I told you what I was predicting after 9:30 opening bell. But as you can see, we actually quite did the opposite. So let's just skip the 5-minute chart and come directly to the 1-minute chart and to my trade setup. Let me just turn on my drawings. At 9:30 opening, we went lower, but we didn't manage to take out these relatively equal lows right here. So these lows actually stayed intact. What price did then is he rallied up to the upside and kind of manipulated all-time high buy-side liquidity right here. Now, the reason why I trusted this as a manipulation and a buy-side liquidity sweep is because, as you can see, I trade M and Q. And if you take that in comparison with the NQ, the older brother of micro Nasdaq, NQ actually pretty much rated and manipulated to the upside, and that's the reason why I trusted this as a manipulation to the upside and why I was seeking lower prices then. It just is trusting my experience, and I pretty much entered right here within this inverse fair value gap right here. Now you may ask yourself, why am I entering inside this inverse fair value gap and not expecting or demand price to trade and close below this fair value gap and then retrace up into it and enter right when price retraces up into this fair value gap? I missed a lot of trades in the last few days and weeks because I was expecting the retracement, but the retracement never came. Now, yeah, I'm kind of used to enter early, yeah, because over the last few months, I really improved my understanding in regards to ICT's concepts. So I just trust the fact that we are seeking lower prices and are going to take out these relatively equal lows right here. So yeah, it's just enough for me because I view this as smart money accumulating more short positions. So what did I do? I just dropped down to the 30-second chart, and what I was looking for is just a premium array above market price. And when price was trading down here, the next PD array was this volume imbalance right here. So yeah, I just did the market order as soon as price came up into this volume imbalance right here. My stop loss was just above this auto blocks high level. What actually happened then is price disregarded this PD array, this volume imbalance, and this fair value gap right here. So usually I just put my stop loss above the third PD array when being bearish. In simple terms, when I'm going short, I want to make sure that my stop loss is protected by 3 PD arrays. And now we have this fair value gap right here. We have this wick, 1 minute wick, consequent encroachment midpoint right here. And we have this order block right here. So price came all the way up into this last PD array that was protecting my stop loss. And I gotta admit, I was really nervous when price came up into the last PD array, because yeah, I'm not used to trade all-time highs. It's kind of the second time for me to trade all-time highs. So my experience told me, yeah, we have all the confluences for lower prices, but like, I'm not a machine, okay? Price is approaching my stop loss, so I'm kind of getting nervous. But yeah, I trusted. I just knew, okay, we just have this one last PD array that protects my stop loss, so I just need to trust that order block midpoint right here. So yeah, price approached the order block mean threshold right here, and we just kind of wicked into the order block mean threshold, and I saw the bodies actually close below the lower quadrant, which actually, yeah, was a sign for me that we probably go lower. And yeah, this is actually what happened. This candle just managed to wick into the order block mean threshold, and then we broke lower and created a market structure shift right here. This was the point in time where I kind of calmed down and just committed to the trade. Then we had a market structure shift, came up into the fair value gap right here and the propulsion block midpoints here, and then we traded down to the downside. Initially, I had my profit target right here, but since price didn't actually trade it like I expected price to trade to my profit target, trade my take profit and put it right here to the first presented fair value gap midpoint, because yeah, I just endured too much of a drawdown right here, and I just wanted to be done for the day and take my profits out of the markets. If you can remember, I told you that we have bullish bias. So normally I wouldn't just short all-time highs. Due to the fact that I'm like a more experienced ICT trader, and over the last few months I gained enough trust into my abilities and ICT's concepts. But for trading beginners, I absolutely would not recommend taking this trade, because the probabilities that this trade is going to be profitable 10 out of 10 times is, yeah, really low. You really have to be an experienced trader to take this trade. You also had to acknowledge the fact that it was Friday, so usually around the end of the week there's not coming much of an influx of volatility into the market. So yeah, this is actually another big reason why I took this trade right here. If this trade would have came up like on a Monday or Tuesday, I would have never taken this trade, because yeah, the volatility in the beginning of the week, and yeah, considering the fact that we are trading in all-time highs, yeah, that would have been absolutely a stopout for me. But yeah, as I told you, due to the fact that it was Friday, we took all-time highs, we had a huge manipulation, a quick manipulation to the upside. It was just all signaling lower prices for me, and these relatively equal lows right here, they were just too fine. And as you can see, we have taken these relatively equal lows right here and even retraced down into a new day opening gap. I didn't drew that into the charts, but yeah, you can look up on your own charts. Here's actually a new day opening gap. So hypothetically, you could have traded and took this the whole way down to the new day opening gap, but in hindsight, it's always easy to say. The biggest mistake beginner traders do is they fade their higher time frame bias, as I was in this trade right here. But since I am not a beginner trader, I would absolutely recommend you that you stick to your higher time frame bias, and that you always take trades within the direction of your higher time frame bias. In simple terms, if your high time frame bias is bullish and you are trading in all-time highs, you just simply take longs, okay? You just don't take shorts, okay? Just make it a rule for you. If your buy is bullish on the higher time frames, you are only looking for long and not for shorts. If I hadn't stick to this rule in the beginning of my trading journey, I would have lost like so many more trades. And yeah, this is actually one big lesson that enabled me to get profitable in a more quicker and stunning fashion. So keep in mind, the slow and steady way is the quick way to become profitable. So I would just recommend you to stick to your rules, because otherwise it will just take more time for you to become profitable than it actually would take if you stick to your rules. To wrap it up, guys, that's it for today. I hope you enjoyed it. If you are interested in watching me actually micromanaging and entering the trade and writing into my take profit, just check out my new YouTube short. And yeah, I catch you in the next one.